Stock futures are volatile as Italy's Mario Monti is tasked with forming a new government, and the focus now turns to the U.S. The Super Committee's deadline is looming, and politicians are deadlocked over taxes and spending cuts with 10 days left to go. I'm Alix Steele, and the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alix Steele with The Street, and together we bring you Morning Call. Scott, let's get to it. We have stocks ending last week with an up note, launching a good comeback on Thursday and Friday. Looking really choppy, though, this morning. What's the resistance level we need to watch out for?
I think first what we'll do is we'll watch for support. We'll see what level from Thursday and Friday could hold to see if it's viable, because the macro pattern in the S&P still remains intact. We're still in an uptrend. Yes, the speed has changed, and last week was definitely one of those weeks that shook up the momentum trend trader, but overall, those holding on to macro positions that have been trailing it, trying to use the Fibonacci retracements, they've been rewarded. They've been giving it a little bit of space, and they've been making nice appreciation on their holdings.
Right, so before we get to resistance, let's go to the chart and look at that support that you might be buying today.
There you go. So take a look at the chart. You'll see this pennant. All right, if you recall, obviously, just to go over, this was the low. This was October 4th reversal day, the day of importance. Here was another day of importance when we broke this downtrend to the upside. Had a little bit of a consolidation before we had continuation to that 1292 high. Then 2 distribution days, came all the way back, and then this was Wednesday. What the problem here was on Tuesday, we looked like we were going to take out the fourth quarter highs, and a lot of traders were feeling frisky, holding multiple positions, and they got blindsided by those yields going over 7%. And on a potent down day like this, that's when traders clean up some positions, they take a step back, and they want to really figure out their commitment. Then Thursday, Friday, we took back more than half of this potent down day, getting rid of the importance of it, and now we're still in this macro wedge type pennant pattern. And if we could start breaking above 1272 to 1274, we could see new highs in the fourth quarter. But for today, I'm going to be looking to see if I could buy the 1250 area, and I think for momentum to stay in this long trade, it has to hold above this recent pivot, which is about 1226, and then really pent up energy would leave if we maybe 1240.
So why are you so convinced that this isn't just a relief rally? I mean, we're not making higher highs, we're not making lower lows, so how do you know, why are you so convinced it's going to go to the upside?
I'm not so convinced it's going to go to the upside. I'm just trying to stay with the trend. And we've talking about holding higher each step of the way. You have sectors that are outperforming. You have stocks making some historic highs. I see tight setups. If this market wanted to just fall apart, it could have already. But right now, it still can be under pressure. So if you look one more time at this wedge, let me show you how things can change. Go back here. What a wedge is, it's a time pattern that consolidates a big move, which we just had from the lows. So sometimes it constricts, and when it resolves, it either continues to trend or it went too far and it goes to the downside. So if you want to know which way it's going to go without having to anticipate it, you start buying above, just say 1272 for range resolution to the upside. Or if we start breaking below this 1225, 1227, you could see a move back to the 50-day at 1200. So it all depends on your camp. I think right now, technical traders, those that are holding positions, have been getting rewarded. Just have a hedge on, just in case you get days like last Wednesday that could throw you for a loop.
All right, so let's look at some sectors that you might be looking at to go long today if we can hold those support levels. I want to look at semis. Okay. Can this sector actually break out? Because we're seeing some, the names like Amazon, Google, the high beta tech did really well on Friday. Can the semis catch up? They were only up 1%.
The semis have been a spot where it's been pretty strong. There's been the nuts and bolts of tech, which people consider the semis, have been just slowly going up, which has been different than the past few years. So if you look here at the semis, you will see that the pattern actually is good. The pattern looks like it's ready to break to the upside. Here is the low. You have a nice descending channel that typically gets broken to the upside. If the SMHs start getting above 32, 32.30, you're going to see continuation. And within that group, look at Intel. Intel's been gaining respect. Intel is almost at the highs here. So if this is a barometer for the semis, this is showing you some health, considering when we made new lows in the market, Intel held higher, and now it looks like it's ready to go again. Watch this 25 to 25.50. If we close above there, you're going to see some friskiness go to the other semis.
And Qualcomm, in addition, after that great quarter they reported.
Yes, Qualcomm has been an institutional favorite real quickly. Nice earnings on the move. for momentum. If Qualcomm could start breaking above this 57, it's going to go again. It held the earnings gap, technically acting very well. Qualcomm is something to stay with.
I want to go to retail to see what kind of risk we have to watch out for, because we are having a slew of earnings. We had Lowe's come out today. The report was very solid, but then tomorrow we have a big day. We have Walmart, we have Saks, we have Home Depot, we have TJX, we have even more, but I'm not even going to tell you. And October retail sales. That is a huge list of stocks and numbers you have to watch out for. Is there any bad news baked into retail? Do you have to be careful?
Yes, I don't think there's any bad news baked in because all these stocks are trading so strong, so they're expecting some strong numbers. So if the numbers are bad, it could be a setback. So if you look here for RTHs, you'll see.
Not to mention $100 oil prices.
Yes, close to
Side
that.
note, but there you go.
All right, so take a quick look here at the chart of the RTHs. You will see that this group hasn't been waiting for anyone. Okay, if you remember that October low that took out the previous summer low, this held higher, and I've been talking about that for a while, and now it seems like it's going to break on the break down the door of 114, which is not even the fourth quarter high. You're talking about highs in the year.
Right.
So when you're trading relative strength, retail has been that spot. And if you look at something like a Walmart, unbelievable move this year. Look at that. At the highs, remember we talked about it when it broke this downtrend here? And then you do have other retail stocks that look good. Under Armour,
right.
Macy's, JCPenney, Decker. So there's like high beta retail that looks decent, and then there's some nuts and bolt retail that looks all right.
good. I feel like their quarters have never been good.
Let's look at the chart. I want to show you real quickly. Look at this nice tight chart. You know, for me, this is what I look for. Nice move off the lows, right near the highs. It gets above 34. You could see a move to 36. This is a nice tight setup, even in JCPenney's.
All right, then really quickly, if you did want to go long the RTH, say into all these numbers, is there a way to hedge, though, just in case we get some disappointment that's not baked in?
Well, if you're just, say, long JCPenney's or long Macy's or long some of the stocks, then you short the RTHs. So this way you long the stock you want to be long, but you short the indice just in case it gets a setback, so at least you're hedged a bit.
All right, let's go to oil because oil prices are almost near $100 a barrel. We have Brent at 114. Want to go to the OIH. I read a very bullish note on oil rigs over the weekend. Basically, they can charge more for day rates, and we saw Ensco prove that last week. Is it showing a lot of upside?
I like the pattern in the OAHs. You had to move off the lows. You have a nice tight pattern getting put in place, so it gives us a point of entry or a new point of entry. If you look here on the OAHs, let me show you. This chart looks tight. You have the move off the lows. It already broke above this prior resistance, and it's holding above it now. If the OAHs start getting above 131, 132, it'll set it in motion, and you have stocks like just, look at this APA.
Which is not an oil services stock.
Not an oil stock. But anyway, looks good above 105. Could continue. Schlumberger looks good. I know a lot of people got shaken up last week, but nice tight pattern in the upper range above this 77. Could continue. Halliburton looks good also. Looks just like the OHs. So when I see tight patterns after a big move, that shows me that accumulation is in play and you can see momentum.
All right, really quickly to wrap this segment up, I want to go to the transportation index, the IYT. Is it showing strength, and does that sort of boost the Dow up with it?
Well, guys in my chat room, they showed me the IYT. I don't really trade a lot of stocks in that group. And I'm starting to trade new stocks because some of the stocks I do trade are getting very sloppy. So, I can't be an old dog. I got to be the red dog and find a new trick. Oh, look at that. Anyway, IYT.
That wasn't planned.
Take a look here. That wasn't planned at all. It looks pretty good here. You had a big move off the lows. It's already taken out this resistance, and now holding above this resistance is good. So this starts getting above 89, 90, or above 90, and it can have a move back to 95. So there are a lot of indices set up for new move highs, but at least we have tight consolidation to see which way they resolve if you don't want to cheat and be a little early. And
we'll be right back to talk about gold to see how that is holding up, as well as some stocks like IBM and Boeing. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're back. We're talking gold. So, Scott, regardless of whether or not investors are using the GLD and gold as sort of a safe haven or risk-on trade, I mean, it's sort of all over the map. Even experts are pretty confused. I want to focus specifically on a catalyst we're going to see after the bell, and that's the 13F filings. There's been a lot of rumors that John Paulson, who owns 13.5 million shares, 31.5 million shares, of the GLD, might have sold. He's been under a lot of pressure. His portfolio was hit by some bad trades. If he sold, some of his GLD, that's going to be very difficult for some traders to swallow, and I think we're going to see a lot of movement if that happened. What are the levels you're going to have to watch?
Well, if that happened, if he sold, what does that mean? He might be out of the way. And that's what could have caused some of the pressure on the GLD, which is why we had that bit of a correction where people are like, why is gold not acting well? And now gold has actually been acting much better. A lot of guys are talking a lot more pattern trades versus just buying and holding. Our thesis was to be long gold if you have positions, multiple 7 to 8, always have 10%. And then as a trade, you have to use the tier system based on the pattern. So if you look here at the GLD, it actually looks pretty good. This was the last time we really spoke about it. This is, who knows, maybe he sell, maybe Paulson sold during this time horizon. You had a nice tight pattern here in gold, and then it resolved to the downside. And then it consolidated, built a lower level of support, and then it broke right back above here. And then this was that Tuesday when the market was getting really hit. It showed relative strength. And then you had to move to the prior resistance. And then here was your little pullback. Closed pretty strong on Friday. So now I would say short term, as long as it stays above this 169 to 170, I think you have nice momentum in gold. And then for a breakout, all we have to do is get above 174 to 175, and it could be back to 180 on the GLD.
And the flip side, because I think there's a lot of expectation that Paulson did sell some of his shares, that if he doesn't, that also is a pretty decent sign for the strength of gold, wouldn't you say?
Yeah, well, if he didn't have to get margin calls and he didn't choose to sell gold, but sometimes you have to sell what you can, not what you have to, that whole spiel. And if he had to sell it, that's what could have caused the pressure. And if he's done selling it, that means there's no more resistance or less resistance, and it could be easier for gold to move to the upside. And
margin calls is exactly why gold hasn't been acting like it should in terms of a safe haven, because you need to raise cash for other assets. So good to know.
Can't eat gold.
No, you can't eat gold. All right, and then so popular trade recently has been long gold, short gold stocks. You would have been not happy if you had played that trade recently, though. We saw gold mining stocks go green pretty fast on Friday. Yeah,
they've been acting really well, and we've talked about them. And like 2-3 months ago, I gave them no respect because every time you were long then, they had some kind of spot secondary or something blew up. And lately, these stocks have been in vogue because I guess they're seeing the sustained level of gold to the upside and the profitability. And the patterns have been getting better. So, you want to talk patterns. You mentioned what Randgold as being the #1?
Yeah, well, Randgold's near the 52-week highs, but it's really interesting because it doesn't really have that much of a dividend. People like it for the growth story, but its Q3 numbers on the headline were not that great and very disappointing. I was talking to one portfolio manager who said Randgold has one more quarter. It gets a free pass this quarter. It gets one more quarter. If they can't get over their production hurdles, the growing pains that they're experiencing in West Africa, it's going to hurt.
Well, at least for the stock, it was one of the first to make new highs, so it gave some confidence to the group that stocks can make new highs, maybe even without blockbuster reports. So if you look here at gold, I remember talking about it twice. Once was back here when it broke this mini downtrend, and then this is when it came out with earnings, and it held at 115, and it's still holding 115. So this group stays in vogue, which it looks like it will. You can get some momentum as it clears this 120 area. So this actually started to be a bit of a catalyst for the rest of the sector, that stocks can move through highs.
So if you see it kind of breaking out, would you be jumping on there for momentum?
Yeah, I think momentum trade easily.
And then if you look
not easily, but
if you look at Newmont, also near 52-week highs, but doesn't have the sexy growth that Randgold does. It just has a dividend. How do you weigh that?
Well, this one has liquidity, it has dividend like you said, and it just gave you a great pattern for equity appreciation, so you got more bang for the buck there. If you look at Newmont, you'll see this has been moving very well. We started talking about it, I think way back here, but more recently when it broke above this 68, it broke above 68, went to 72, retested that breakout, and it's holding in well. I'd say investors stay with Newmont. It might need a little bit of time here, but then after a bit of a consolidation above 72, this will get interesting again for momentum. All
right, so Randgold might break out. Newmont might need some more time. Want to wrap it up with Kinross then, one of the worst performing gold stocks in the bigger tier. So it's between mid-tier and large cap there. Really not doing well at all this year, but it had one of the strongest moves on Friday. Is it ready to go? Is it ready to play catch up?
Well, let me take a quick look. I don't hear a lot about this, maybe because of its underperformance. So if you take a quick look at, what is it, KSC? I don't even know the symbols. KGC. It shows you how
no, K,
K,
G,
C. There you go.
Yes, we got it.
And I just put it up before. Like, look at all these other stocks we just talked about ready to make new highs. This one had a gap lower, never even thought to fill it, trended lower. Now, I guess if you had to be long, you could be long versus small little uptrend. So maybe be long as a bottom feeder type versus 1350, but make sure that's your stop. But sometimes these things open up well below it. I would say for it to start acting a little bit better, it's got to get above 15. So if you love the miners and you had to be in it, maybe be long tier 1 here versus 1350. And if it starts getting into the upper end of this range and holds in well, above 15, then you're back testing that gap right around there. So.
And it is a large cap, and you do see his underperformance is definitely going to be something to consider. Okay, quick ways to make some cash. Want to hit on IBM. We were talking about a stock that was going to be ready to break out. Then Buffett comes on CNBC, says he now owns 5.5% of the stock. IBM pops. What do you do?
Well, it's a little frustrating because if you look at our sheet here, we had IBM on here ready to go over it as a buy through 188, and we've been talking about how strong it's been, how it's been rewarding investors who aren't traders, aren't trend traders, but actually hold situations. They do their homework. I guess Buffett does his homework. He is a pretty substantial guy, or his staff. But look at IBM. Nice setup. This was telling you something's going on here because it remains strong. Here is when it had the huge move into earnings, and earnings wasn't quite enough, but it held this uptrend. You did have a little faulty action, but there was a lot of faulty action last Wednesday, and then it popped right back to this 188. And now if it could hold above 188 today, because sometimes it's emotional when Buffett comes in, it opens up and then trades lower. But if it stays above 188, you could see this thing take out 190.50 very easy. This will be in play today. I'm long small. I got in actually as soon as I heard his clues and this and that. I was waiting to buy it, and I'm like, let me just buy a little bit before I come in here. So
there you go. All right, we have 5 stocks. Wanted to try and do this in 1 minute here. Boeing signing the biggest deal in history over the weekend. Emirates buying $18 billion worth of its aircrafts. Is there a trade?
Yeah, this chart looks really good. It's opening right above this little pivot. Look at the pivot right here. Above 68, holding 68, or a close above could get you 72 pretty quick.
And Apple really still getting some bad press here. Could it really hit that 360 level?
I think it can. It was a really good setup for us last week. Thursday, Friday, some traders got rewarded, including me, for shorting the up open each time. I did cover on Friday into that, below 382. If you look here on Apple, there is some support around that 100-day. But I will say this, if Apple doesn't get back above this 388 to 394 area within this week, you're going to see more pressure. And then if it breaks 381, you can get a move down to the 200-day, which is actually down here around 362.
And then on the flip side, Google was really, really strong, breaking above 600. Do we need to brace for any downside, or are we really just going to move higher?
Google was a great trade above that 602. It peaked out, and then on Wednesday came back in the base, but then it popped right back up. This stock, in my opinion, is one that you could stay with. As a trader, it's a little hard, it's a little sloppy, but if it gets above 615, the old high is 623, then at some point this thing could be back above or make new highs above 700 or so.
And what about Caterpillar? Had a big jump on Friday, and the CEO said on the conference call the best thing that could have happened to construction equipment industry is lower inflation in China, now at 5.5%. So possible upside for Caterpillar.
Yeah, it had a nice move off the lows. It went from underloved to loved once again, and then the chart started to show constructive action. And then if you look here, there's still an entry here, guys. You haven't missed a boat for this new move. This was the move off the lows. It took out this recent downtrend. It's been holding higher, holding that gap, trying to even nudge forward. So above this 97, well, you're going to see 100, 105 at some point in the fourth quarter.
All right, that's it for us for today. It's going to be a crazy week. People looking for the super committee decision next week if we can get one, still focusing on Italy. So good luck. We'll be here for you.
Don't fall asleep behind the wheel. If you're going to stay with multiple positions, have a hedge. Just the most important thing is know your time horizon. Don't trade out of your bounds in the same way you don't want to live beyond your means. Trade within them, and you'll always be safe and you'll always be comfortable.
All right, happy trading, everybody. I'm Alix from the Street.